Welcome back to the channel, everyone. In today's session of our Fraud Analytics lecture series, we're going to dive into some important terminologies you're likely to encounter while working as a fraud analyst. Understanding these key terms is essential to navigating the world of fraud detection and prevention, particularly in the context of credit card transactions. We've categorized these terms into two broad sections, and today we'll focus on those related to the card life cycle. Let's get started with the first term, the customer. The customer is essentially the person who wants to buy a product or service and is responsible for paying for that transaction. For instance, if I want to purchase a new phone from Amazon or Flipkart, I am the customer in that situation. The customer is the one initiating the transaction. Next up, we have the merchant. A merchant is the seller who provides the product or service. For example, Amazon or Flipkart is the merchant when you buy your phone from them. The merchant charges the customer a fee for the goods or services provided, and they are at the center of the transaction along with the customer. Now, let's talk about the role of the issuing bank. This is the bank or financial institution where the customer holds their account. The issuing bank is the one that issues the credit or debit card the customer uses to make purchases. For instance, if you bank with ICICI or HDFC and they provide you with a card, then that's your issuing bank. On the other side, we have the acquiring bank. This is the bank where the merchant has their account, and it's the bank that receives the payment for the product or service. In our example, Amazon's bank is the acquiring bank, the place where the money from the customer's bank will eventually be deposited. Card associations, like Visa, MasterCard, or RuPay, play a crucial role as well. They act as intermediaries between the issuing and acquiring banks, ensuring the transaction is processed smoothly, securely, and without any issues. These associations are the bridge that connects the two banks during the transaction. Now, let's break down the card transaction flow. When a customer buys a product from a merchant, the merchant sends the card details to the bank. This could be done either through a point-of-sale POS device or an online portal. The acquiring bank then forwards this information through the card association, let's say MasterCard in this case, who checks in with the customer's issuing bank. The issuing bank then authenticates and authorizes the transaction, confirming that the card details are correct, and the person making the transaction is indeed the cardholder. Once verified, the money is transferred from the customer's account to the merchant's account. In this process, authentication refers to verifying the cardholder's identity through methods like passwords, biometrics, or multi-factor authentication. Once authenticated, the issuing bank moves on to authorization, where it approves the transfer of funds. The merchant can then deduct the payment from the customer's account and complete the transaction. Now let's explore two additional concepts, on-us and off-us transactions. When both the customer and the merchant use the same bank, let's say ICICI Bank for both parties, this is called an on-us transaction. Since both accounts are housed in the same bank, there's no need for a card association to mediate. In contrast, an off-us transaction occurs when the customer and merchant use different banks. Here, a card association is needed to help process and secure the transaction between the two banks. Lastly, we'll cover card present and card not present transactions. A card present transaction happens when the card is physically available at the time of the purchase, such as when you use a POS terminal at a store. On the other hand, a card not present transaction occurs when the card isn't physically available, like during online shopping. This type of transaction typically relies on the customer manually entering their card details on a website. And that's a wrap on today's session. If you found this breakdown helpful, please subscribe and share this video with others who might benefit. Your support helps us continue to create more valuable content. Thank you.